there, but think he is on mute.
Yeah, hi.
Tarunji is there.
Unfortunately, I'm traveling right now. So
Okay, okay, okay,
yeah,
Shubham.
I'm just
Tarunji is there.
sorry, I'm on passive mode right now. Yeah.
Okay, okay, no issues, Shubham. Tarunji, are you there? Hello, is Tarunji there? Tarunji, are you there? Good afternoon, everyone. Good afternoon, everyone. Well, we have Annapurna ma'am today from Mysore. She is here to address today's topic, recovery of demand. And I hope most of the participants they have joined in. So we can start the session in next 2 minutes. We'll wait for the few participants who are supposed to join in. So we will start the session at 5:05. Good afternoon, everyone. I'm C. Surbhi Bora, co-chairman of GST Committee ACAE. I welcome you all for today's session with CA Annapurna Shrikant. She is from Mysore, and today's topic is recovery of demand. And I welcome you, Annapurna ma'am on behalf of ACAE, and thank her to be to accept our invitation for being today's faculty.
Thank you. Pleasure is mine.
Yeah, so before beginning today's session, I would just like to give a little brief on what is the topic today. So today's topic is recovery of demand. So basically, this is something which is now very important for all of us to know, because recovery has already begun from the department's end, and we have to understand what is the authority and power given to the officers regarding this particular provision, and what are the requirements that are to be followed by them, who can authorize the demand, how the what are the modes of demand, what is the what is the technique which can be used if any recovery notice has been issued, and if any provisional attachment has been made, and in what event the recovery proceedings can be initiated. So we have to understand all this, and Annapurna ma'am will be doing that today for us. And before I start the session, I would just like to give you a brief introduction of Annapurna ma'am. So she is a chartered accountant who has been practicing for last 15 years in indirect taxation, audit, consultation, and litigation. She has been an academic achiever and has secured All India third rank in her professional qualifications, all three professional qualifications like CA, Diploma in Information System Audit, and CS. And she was the vice chairman of State Committee FKCCI for 1819, and she was the co-chairperson of Women Entrepreneur Committee FKCCI for 1920. She is also impaneled member in faculty of Indirect Taxation Committee of ICAI. She is a sought out resource person as various professional forums for government in for conducting training programs for practitioner, trade, and officers, and has been a part of more than 200 programs. She has also authored various books like bookkeeping and record keeping in GST, GST and Abridged Compendium, Synopsis to GST Law. She has written various articles which has been published in many e-magazines for professional bodies and has also developed many handy templates, trackers, compendium, and other resource materials for GST. I welcome Annapurna ma'am to our session today, and we know that this is a technical session which will be conducted for next 10 days for all the students for their benefits, and this is a certificate course, and I hope that everyone will be benefited with today's session. I now hand over the stage to Annapurna ma'am and who will enlighten us for today's topic. Thank you.
Thank you very much, ACAE, for the kind invitation to be a faculty on this very interesting topic, rarely addressed. I also thank Surabhi Bohra for her kind introduction of mine. It's a pleasure addressing this gathering. So, without taking any more time, let us. I just share my screen.
Yeah.
The screen is visible, right?
Yes, it is visible.
Okay. Recovery of demand under GST. Let's have few questions to ponder upon. Then we will, go into the couple of scenarios. So I've given this today's presentation a little bit of a different approach, wherein we're not running through the legal provisions or the connected rules and forms, but rather I've taken up 10 case studies or scenarios basis which we'll evaluate the legal provisions and understand what is the way out or how do we approach these aspects, so that in our practice or in the practical situations we encounter, these aspects might help us to consider how do we respond to notices or things like that. Now, to start with, where does the recovery process commence? Does it commence when an intimation, if at all, is issued under Section 78 by the proper officer who is responsible for initiation of the recovery proceedings, or is there a point in time where the actual recovery process commences? In fact, I draw your attention to Form DRC 7, which is an electronic summary of the orders, adjudication orders passed. I would say that would be the starting point for the recovery process. Why do I state so? Because 142 Subrule 6 also states that the electronic summary of the order, in Form DRC 7 is also deemed to be notice for recovery. So that is where this recovery process commences, unless appeal is filed, for which a time period of 3 months plus 1 month condonation is available in Section 107. However, Section 78 provides that after the service of order, within 3 months, the proper officer may initiate the recovery proceedings. And there is also a proviso to it stating that if he is of the opinion that recovery has to be done within a lesser period, that is permissible, provided he states the reasons for such prior recovery in writing and puts it on his file. Well, if it is decided to file an appeal, earlier the better, because the time starts ticking once DRC 7 has been served on the assessee. Now, is there an adjudication process required for every recovery, or is there a direct recovery permitted irrespective of the adjudication process? I draw your attention to Section 75, subsection 12, and the explanation inserted there too, where the self-assessed tax could be recovered directly without issuing a notice afresh. Of course, we have Rule 88C, which we will discuss in a while. Now, if we think upon why this direct recovery mechanism is is brought in under the GST law, we may also need to understand this concept of useless formality theory. Of course, we have various judgments where principles of natural justice have been spoken upon, and whenever any rights of the assessee is being affected or any liability or demand is being put upon a registered person, yes, he must be provided an opportunity. But what does this useless formality theory states? It says that even if a notice is provided, the end result will not change. Hence, giving a notice would be just for the sake of it. Hence, it will be a useless. But is this concept or theory accepted in India? It is accepted in other countries, but in India, it has not seen great acceptance. Hence, principles of natural justice where opportunity to be provided is upheld in our courts of law. Well, the very insertion of Rule 88C, although the law, Section 75, subsection 12, states that the moment whatever is reported in 1 but not discharged in 3B, I'm talking about the explanation inserted with effect from 1st January 22. So, although there is a clear mandate in the law that without issuing a notice or without carrying the adjudication procedure, what has been declared as self-assessed taxes could be directly proceeded with recovery proceedings under Section 79. Despite this provision being so clear, still the government has brought in Rule 88C, where one opportunity in the form of DRC 1B is already provided. This itself upholds the aspect that this useless formality theory is not greatly considered in India, and principles of natural justice are given due importance over here. Now, one more aspect to consider is what gets covered as undisputed arrears. I report in GSTR 1, I don't discharge in 3B, there is an interest incumbent upon such liability which is there. So, since it is self-assessed and self-declared, it will by default be deemed to be undisputed arrears. If at all, we need to avoid the direct recovery proceedings, be it on the tax liability or even be it on the interest part alone, then it is very important to dispute the demand. The moment the demand is disputed, the rigor of 7512 is lost, and hence an opportunity has to be provided and the adjudication process has to be taken up. We are looking at few practical cases and how to address these scenarios. Maybe we will dwell upon this aspect a little more detail during that time. Can a standalone demand be created for interest and penalty without demanding the underlying tax? Vis-a-vis standalone recovery of interest, the first part I'm explaining about or I'm contemplating about standalone demand, while the second part is standalone recovery. We know that Section 75 states interest is automatic, even though not specified in the notice. We also know that 7512 interest can be recovered directly. All these things are there. But let's say ASMT 10, which is a scrutiny notice, is issued under Section 61, and then for interest alone, let's say it's a belated 3B, that same case I'm taking up, for interest alone, and notice under 73(1) is followed thereby, can a notice only for interest be valid? This is something we are going to dwell upon deeper in the ensuing presentation. Going further, notice of demand versus notice for recovery versus intimation of initiation of recovery. Are these distinct terminologies? Is there a difference in all of these? Notice of demand maybe we are more akin with the forms. So I'm connecting that to DRC 1. Notice for recovery, DRC 7. Why do I say DRC 7? I already iterated that rule 142 sub rule 6 deems DRC 7 to be a notice for recovery. Now, we've already seen a couple of intimations coming. See, even after DRC 7 being passed, despite that deeming provision of treating it as notice for recovery, we also see that department is issuing letters or intimations under section 78, informing the registered persons or the taxable persons about the initiation of the recovery proceedings, so that probably they want a confirmation before they proceed with the recovery that they have not gone on appeal, or there could be a possibility of 1 month condonation which they want to make use of, all those things. So so DRC 1 would be the notice of demand, DRC 7 would be the notice for recovery, and a letter under section 78 would be the intimation for initiation of the recovery process. Now let's have next question. DRC 7, which is the original adjudication order, APL 4, which is the order in appeal. So the appellate authority has issued an order. Can both be equated from the operational perspective? Is there a distinction? Is APL 4 also a notice for recovery or something else? We will look at this. Let there be some trailer before we see the whole movie. DRC 1B has been introduced and made functional. Recently, the GST portal also has published some information about DRC 1B, stating that automatically notices would be system generated and posted onto the common portal. Within 7 days, it needs to be responded and all of that. Now, the very recent 50th GST Council meeting has proposed to bring in few more forms in the DRC series. DRC 1C, DRC 1D, 1C being for the 2B and ITC claim mismatch, 1D being the recovery form owing to DRC 1B, let's say non-reply or situations like that. So we are really heading towards a system-driven intimations and probably recovery too, because the DRC 01D, which is a proposal for recovery using this form. So compliance is definitely the key, but yes, disputing and objecting to the notices could be the strategy if the demand is not acceptable to be paid. Let us look at few scenarios which we will dwell upon in detail. I've listed some 10 scenarios to examine from the legal provisions and practically what we could consider and how we could strategize our responses or the course of action from our end. First and foremost important aspect, is spot recovery permitted? It's very commonly seen that the moment inspection of the premises happen or business place is visited, search and seizure procedures are undertaken, the officers insist upon spot recovery. They name some liability and insist upon spot recovery. The client is in a very anxious state of mind, psychologically he's under pressure because of that whole proceedings being conducted. His relief would be, okay, let me pay whatever they say for the time being and let me be freed from this whole atmosphere. So that will be the mindset of the client, and there could be so many other pressing reasons why he is willing to make a payment to buy peace at that moment in time. But does the law provide for this spot recovery? We will look into this. Second scenario, GST or 3B has been filed belatedly. Initially, we've seen n number of cases, and there could be genuine reasons why 3B has been filed belatedly. Scrutiny notice in ASMT 10 is issued demanding the payment of interest with a reference to section 7512. Is it possible for the department to proceed with the recovery proceedings by directly jumping into 79 and skipping the adjudication procedure in 73, 74? Now, it has started at 61. Now can it jump to 79? So let's look at this aspect as well. The third scenario, there has been a difference between GSTR 1 and 3B, mismatch between 1 and 3B. 1 is more, 3B is less. Now, the portal, on the common portal, DRC 1B is going to be served in Part A, and within 7 days, it has to be responded with. Otherwise, recovery proceedings will be initiated. So how do we go about with this? This would be a common issue which most people might face owing to inadvertent errors or whatsoever reasons. Let's see how to address this. Let's take the next situation where department has preferred an appeal under section 1072. I repeat, the appeal is filed by department and not by the assessee. And the appeal is against a refund order which has been sanctioned. You got an RFD 06 and you got a 1 crore of refund, but department has gone on appeal because it's unhappy that it had to pay so much of refund to you. So it has gone on appeal. Now, the first appellate authority has allowed the departmental appeal, leading to a liability. Now, because of this appeal, the first appellate authority has passed a order against the registered person. So RFD 06 is turned down and a liability is fastened. Now, can the recovery proceedings be initiated directly given that there is only RFD 6 and there is no notice? So let's examine this situation as well. The next situation which we are discussing is the first appellate authority has passed an adverse order for the registered person. We all understand that section 107 requires pre-deposit of 10%. Section 112, that is the second appeal provisions, it requires a further pre-deposit of 20%. Now, let's say finally there is some demand which has to be borne or paid by the registered person. Can the pre-deposit be offset or appropriated against the final demand, or is there a mechanism for that, or how much is the money to be paid to the government? Is it after the reduction of pre-deposit or is it the gross amount, and how do we go about with it? So we will discuss this aspect as well. Now, few more scenarios. We all have filed DRC 03. I'm sure one case, one DRC 03 might be very common, either during annual return or during 9C, or voluntarily we have noticed even after filing the annual return, or department has come up with some demand. DRC 1A has been issued, so you want to avoid the issuance of DRC 1 and hence a payment has been made. Against audit observations, DRC 3 is made. Against ADT 2, DRC 3 has been made. So many reasons DRC 3 has been filed. Section 73 subsection 5 or section 74 subsection 5, which provides for this payment mechanism under DRC 03, states that whatever has been paid through DRC 03, a letter or information has to be given to the proper officer about the discharge of such payment. I'm sure many of you might have been even receiving details, receiving a letter or information from the departments, mails from the department stating that please provide the details of DRC 03 what you discharge. See, because they are required to issue DRC 04 for acceptance and acknowledgement of such acceptance of the liability discharge in DRC 03. Now, let's say you made a payment in DRC 3 and the officer accepted it in DRC 4. but later you realize that what you paid was erroneous. It was not required to be paid. Let's say the classic case of, RCM, Ocean Freight, CIF, where FOB, sorry. So where owing to the position of the law, you were not aware you've paid, but after Mohit Minerals, you want to file a refund for it. Now, if it is an erroneous payment, if it was discovered even after DRC4, can we file a refund claim? We'll discuss this. Next situation I'm taking up, there has been a demise of the proprietor and audit has been commenced before his death. ADT 1 issued, audit observations issued, ADT 2 also issued. So after ADT 2 has been issued, the demise has happened. Can a notice be served on the spouse of the proprietor? Let's add two more situations to this. Notice also has been issued during the process of adjudication and before passing of the order, death has occurred. Now can the order be served on the spouse? The third situation, notice issued, order passed, after which the death has occurred. Can recovery be made from the spouse? So let's try to look at this aspect as well. Now I'm completely taking you to a different case of interception, section 129. Let's say there is a demand which is captured in form MOV 9, which is an order under section 129. Let's say 1B, the penalty equivalent to value of goods and all of that. Owner doesn't come forward, all that. So 129, MOV 9 order has been served and it's been 15 days and the person who has been intercepted did not pay the dues. Now they have detained and seized the consignment. Can they recover that without first confiscating the goods? Let's look into this. And the last scenario I would be covering today would be the HSN funda. Where does the self-assessment begin? Does it begin examining a transaction, whether it is subject to supply? Does it begin whether levy is applicable, the evaluation of that process? I would say the self-assessment would begin at the stage of, even before that, that is identifying the transaction and mapping the classification to it. Classification is a two-step process. First, one needs to identify your product or service, what is the HSN applicable. Second, for that HSN code, what is the rate of tax which is applicable in the specified notification? So whether it is a goods or service, and then what is the rate applicable. Let's say some wrong classification happened, and based on that wrong classification, I discharge whatever taxes I collected. Owing to this wrong classification, is there anything extra which the department may collect or recover from? So all these situations we are going to look into in today's presentation. So I think I've given enough of the trailer. Let's get into the actual abhi picture dekhte hai, theek hai? So the first scenario, the assessee's premises has been inspected and the officer is insisting upon spot recovery. There is no provision under the GST law which provides for spot recovery. No section, no rule, no provision under the GST law where spot recovery is possible. There has to be given an opportunity, even in tax evasion cases, section 74 notice should come in. Hence, it is very important that adjudication process is must before spot recovery. We understand this is the law, but we see practically happening so many things where now client has paid using DRC3. Let's take a situation. The premises is being inspected and searched. It is 11:30 midnight. And at that time, owing to the pressure, he has made some 10 lakhs of voluntary payment under DRC 3, which is nothing but an indication of the spot recovery. Now, during the inspection proceedings, even after, either before DRC 3 or after DRC 3, if corresponding DRC 1A is not issued, then definitely it will lead to be a involuntary payment. The very circumstances indicate midnight 12 o'clock, somebody is making a voluntary payment. Definitely it is an involuntary payment. And in case of involuntary payments, or where there is no liability due, but owing to some coercion or pressure or something, it has been discharged, definitely one must explore the opportunity of, the possibility of filing a refund, because any other amount paid in excess is also refundable in terms of Section 54, read along with the Master Circular 125, and 2 years time limit is available. So definitely, if such payments have occurred, there is a possibility to evaluate the claim of refund. Definitely spot recovery is not permitted under the GST law. Now, this is another situation which I was talking about, where recovery of undisputed arrears directly by invoking Section 79 without going into the adjudication process. But they have not directly went into the recovery under 79. They have come through 61 route. What does Section 61 say? In case of any discrepancies noticed during the verification of returns, such discrepancy should be informed to the registered person by way of ASMT 10, for which reply in ASMT 11 to be given. If reply is not satisfactory or no reply is given, then further proceedings under 65, 66, 73, 74 would be taken. This is what Section 61 in a nutshell talks about. Now, here is a notice which I've taken up to display for our understanding that this is how practically things are happening, that we should ASMT 10 here. Now, what are the points, or how do we go about? Now, first and foremost, we have to decide about what is the strategy. Ultimately, the client is willing to pay, then no point in agitating. So it is very important that decision to pay or not to pay should be of the client. Based on the decision of the client, the strategy to be guided should be ours based on the provisions of law, within the legal framework of law. What things are possible to be questioned definitely needs to be considered. Now, my strategy in this case would be, I want to get a notice under Section 73. Why do I want to get a notice under Section 73 is that if I get a notice merely for interest without the underlying tax, then the notice will fail, because Section 73(1) states that the amount specified in the notice along with interest and penalty. So unless there is a tax specified, interest and penalty cannot be demanded under Section 73 or 74. So that being the case, I want to fight on the technical aspect when a notice under 73 is issued, but my objective for time being is that they should not directly jump to the recovery proceedings under 79, but I want a notice under 73 to counter. So in reply to this ASMT 10, what points I would consider mentioning is, point number 1, most important, I'm going to dispute this demand. Interest cannot be stated as self-assessed. What is self-assessment? I myself have to assess this. We have the Mahadev Constructions case and the LC Infra case of Karnataka High Court, wherein it has held that interest computation is not self-assessed, or it is not automatically coming up, but there is an arithmetical calculation which is required even for the interest computation. So many things can go wrong. The very basis, instead of net, they might have considered gross. Some value related error might have happened. Delay in the days, that might have gone wrong in the arithmetical calculation. We have seen practically notices where the wrong due dates have been chosen. There might have a lot of extensions in the due dates that might not have been considered. Rate of interest, many interest for ITC reversal, 24% they have considered, but there is a retrospective amendment. So many things can go wrong even in an interest notice. So the opportunity of being heard becomes very critical. Now, we understand all these from the legal aspects, but practically, let's say, after this ASMT 10, they directly go and issue DRC 13 to my banker. All this law, we understand, at a later point in time or at a higher forum, these aspects will be considered in depth and detail. But how do we practically, go about with it? Our reply should be in such a way that we should lead the officer to issue a section 73 notice. Then we will be able to counter it and thereby avoid going to 7512. So we say that this is not an undisputed arrear, but it is a disputed demand. Owing to some references we can give why we are treating it as a disputed demand, because we are not in agreement with it for the factors which I stated earlier. So that please proceed with the due process of law laid down in section 61(3), for which a suitable reply will be provided in accordance with the law. Something on these lines, if we reply, we will lead them to section 73. Once they go to section 73, and if a standalone interest notice is issued, then definitely I have a great chance of striking that notice itself down, because it becomes invalid when a standalone interest or penalty notice is issued without the demand of tax. Then what is the way out for the department? What should be the correct approach for the department to issue a notice? Then does it mean that for all belated 3Bs what we have filed, department does not get a right to recover the interest from it? In fact, this has been there in the erstwhile regime also. So consider the same situation even when, say, DRC 1A is issued, intimation of tax, interest and penalty, the registered person will discharge only tax. Now, can they issue DRC 1 only for the interest and penalty? So in both these situations, the way out for the department is, first, it should issue a notice including tax, interest and penalty. Whatever has already been paid should be first treated as deposit, appropriate that deposit towards the tax due, then demand the balance payment of interest and penalty. So this is a practice which has been there in the earlier regime as well. And if at all the department has to demand only interest also, it has to come through this route so as to serve a valid notice. So if we keep note of these things, definitely we get a perspective. What is the strategy? What exactly we would like to do? I mean, many people are even thinking, next year being the elections year, we have already seen enough of amnesty schemes, and maybe a couple of more amnesty schemes might pitch in. So paying promptly might, some registered persons might not be willing to pay promptly, but take a chance of keeping the demand and the litigation so that if at all any amnesty scheme comes in, then definitely they might be willing to make use of it. Till then, to keep the case under ventilator. So probably this could be a thought process, or how do we reply and lead it to section 73. So I would like to draw your attention to section 17.5.12, subsection 12, and the explanation inserted with effect from 1st January 22. So before that, we only had this, non-obstant clause where self-assessed tax, which remains unpaid, along with interest or any amount of interest payable on such tax remains unpaid, same shall be recovered under the provisions of Section 79. However, they brought in this explanation very, intelligently drafted explanation, I would say, because to fit the section, the explanation is so nicely drafted, where they say that self-assessed tax shall include the tax payable in respect of details of outward supplies furnished under 37, but not included in the returns furnished under 39. Because prior to this explanation, there was hardly any situation where department would do this, because the moment there is any liability which I'm putting in my 3B, if I don't discharge and file it, it will not allow me to file, because you can't file 3B with the tax payable option. So that being the case, when could they have used this Section 75 subsection 12? There was a very remote possibility. But the moment this explanation has been inserted, they've brought in this Rule 88C. They're also trying to bring in Rule 88D as well, and all that as proposed in the 50th GST Council meeting and DRC 01D, all those forms for the recovery sake. So any mismatches between 1 and 3B will be a little on the rigorous side for, from the compliance perspective, everything we can't litigate. So, that is something which has been brought in. Now, let us do a fine reading of this subsection 12. What does it say? Notwithstanding anything contained in Section 73 or 74. So basically it says that no notice would be required either under 73 or 74. In what circumstances? Where any amount of self-assessed tax in accordance with the return furnished under Section 39. So 39 is our 3B and all those returns where tax is discharged. So I will read again, where any amount of self-assessed tax in accordance with the return furnished under Section 39 remains unpaid. Now this is the whole sentence over here, either wholly or partly, or any amount of interest payable on such tax. Now, which is that such tax? There is also a possibility of taking an argument that now there are two categories of self-assessed tax. Self-assessed tax already paid in a belated 3B file. Self-assessed tax which is still remaining unpaid, which is my 1 and 3B mismatch. My reading of this section is that interest can be recovered directly using this section only with respect to a 1 and 3B mismatch, but not with respect to a belated 3B interest. Why do I say that is, there is no comma in between. It has started from where and ends at remains unpaid. So the next sentence is giving reference to such tax. I would read this phrase such tax to include only the unpaid tax. So 3B, I have self-assessed, paid the taxes, but belatedly. Then the mechanism should be Section 61 read with 73, whatever, that is the route it should take. But in case of a 1 and 3B mismatch, there is something I've declared in 1 which is self-assessed. I have not yet paid it. That is when direct recovery is possible. But yes, might be, it could be an additional point to counter this, but the best way would be to dispute the entire interest and convert it from an undisputed arrears to a disputed demand so as to take it out from the rigors of this Section 75 subsection 12. So these are a couple of pointers, and I also stated the citations where, it was held that interest is not a self-assessed amount, but the officer is required to do an arithmetical computation, and hence an opportunity of being heard must be provided. Now let's take the one more very hot scenario of the difference between 1 and 3B, where merely intimation under DRC 1D will suffice for taking up the recovery action. Now, what does this Rule 88C in a nutshell says? Whenever there is a mismatch between 1 and 3B, and most importantly, this difference will be ascertained tax period wise. Now, this month I paid excess in 3B, next month I paid less in 3B. So cumulatively, if I combine 2 months GSTR1 and 2 months 3B, it will match. But what does Rule 88C does? Rule 88C examines on tax period basis. 1 and 3B mismatches tax period wise. So that is the reason, and it will come as a system generated DRC01B. If you look at the rule notified, why it's notification 26/2022, it states it is a system generated notice and does not require signature. So just at a trigger of the program, it will identify all 1 and 3B mismatches and it will go get dumped in the common portal in each of the person's login. Of course, the rule also says that a mail should also go to the registered mail ID. But I mean, it's going to be a nightmare where, the entire compliance has been outsourced, where the bundle of services for the whole year has been agreed upon. So keeping track every day, because there is a very limited time frame of 7 days to respond. So probably, I'm sure, and I hope that softwares would be working on this, where an alert could be generated for all at the admin password level. We know so many softwares where we use for GSTR 2A, 3B reconciliation and all of that stuff, or filing returns and all that. So generally they have an admin password where some 50 GST numbers of compliances would all be hit through. In fact, I'm also discussing this concept with one of the software providers, where if an alert could be sent for all these 50 registration numbers which are registered through their login credentials, the moment there is a DRC1B, one alert should come to the mail ID of the admin, so that all the clients related DRC1B, some information is available. Otherwise, you imagine every day opening all 60 accounts to check whether DRC1B has come is going to be a nightmare. So definitely software support would be required. I'm sure systems would get developed, and the what we can say notice tracker or a notice alert mechanism will come in, so that at least we know there is a notice which is there, or some intimation which is there to be responded to. Well, till then we have to face this menace, and what is the response or the action that would be required from the from the registered person perspective? The moment there is a DRC1B Part A being issued, the registered person is required to respond in Part B. Two options he has, broadly 2 options he has. One, he has to pay the differential using DRC3, not in the subsequent 3B, but using the DRC3, he has to pay the difference and respond that such difference has been paid in part B of the DRC1B, he has to respond. Alternatively, if he does not agree to the payment of liability, he has to choose from one of the 5 drop downs which is available as to reason for non-agreement with the liability. And this reply has to be given within 7 days, else direct recovery would be initiated once this form DRC1D also will be coming in. I'm sure they are going to automate the whole process, so that so being the large volumes of data being mined by the portal, definitely these automations might be brought in by them also. Anyways, we have to be prepared for this thing. Now, what are the 5 options which are there in DRC1B? Excess liability paid in earlier tax periods in Form 3B. Is it okay to choose this option? Now, I paid excess liability. My 1 was less, 3B was more. 2 possibilities. I excluded some invoices in GSTR1, although pertains to the same period, or by oversight, I made excess payment. Can I adjust that excess payment in 3B for my future liability? It is as if the liability has not accrued at all. I have made an advance payment of it. Is it permitted under the GST law? I understand we have Circular 26, which says that prior liability, if paid excess, to be discharged, to be adjusted in the fourth subsequent returns. All that is there, I understand. But don't you think that will lead to something like a suo motu refund and adjustment of that and appropriating that refund towards my current due? There is a risk. There is a risk where I'm adjusting a liability which I erroneously discharged in the past. Instead of claiming refund, I'm appropriating to the current liability. So it is not recommendable to choose this option 1. Let's see option 2. Some transactions of earlier tax period which could not be declared in form GSTR 1 of said tax period, but in respect of which tax has already been paid in 3B of the said tax period and which have now been declared in 1. This is okay to the extent if we are able to map the exact invoices along with the dates. So I am paying the tax for the very same period in 3B, but I missed reporting it in GSTR 1 of the earlier period. So an earlier period invoice will be reported in the current month, but taxes have already paid in 3B. Probably some invoice series was missed out after filing GSTR 1, but before 3B it was identified. So to avoid interest repercussions, maybe they would have filed. This is better than the first option, but obviously, again, all these reconciliations has to be provided, which has to exactly match. Otherwise, once again, we may land in trouble. Option 3 is interesting and safe, I believe. It says form GSTR 1 or IFF filed with incorrect details and will be amended in the next tax period, including typographical errors, wrong tax rates. I am just remembering one saying in proverb in Kannada. It says, Biso donne tappuskondre 100 varsha ayasu. I will translate this. It says that if we temporarily cross this hurdle, we get 100 years of life. So probably option 3 is an interesting option, which states that, which gives us some time that we will rectify this subsequently, whatever owing to typographical errors and all of those things. Now, option number 4, mistake in reporting of advances received and adjusted against invoices. This is a very specific reason. Unless this reason can be substantiated appropriately, this and this is probably a rare situation also, only with respect to services and all that. And if it is any other reasons, again the burden of asserting what are those reasons and providing a detailed explanation will be on the person replying to this. So for me, the best option is going to be option 3. Of course, if it is option 2, then if I'm able to reconcile, nothing like it. Otherwise, for me, the best option looks like option 3. So, but very important is replying within 7 days, so that the recovery under 79 could be avoided. In fact, instruction number 1 bar 2022 also states regarding 1-3B mismatches, what has to be the procedure owing to this 7512. Now, let's look at the next scenario. This is a situation where I had filed a refund application in form RFD 1 and RFD 06 has been issued. So 1 crore of refund I have received in RFD 06. But department has filed an appeal under section 107 subsection 2. And let's say the first appellate authority allowed the department appeal and stated that refund has been erroneously sanctioned. Hence, the refund needs to be paid back to the government. Now, is there a notice in this whole cycle and procedure? DRC1 was never issued, but only RFD6 was issued sanctioning refund. What appellate authority states is he will pass an order in APL4 stating that yes, refund was not eligible but was sanctioned. This only clears the interpretation but doesn't give way to recover the demand without issuance of notice. Let's say come September 2023, time limit for issuance of notice for 17-18 is going to end, hoping the government doesn't exceed it further. Let's hope that this is going to be the end of it. Then the department will lose the time limit in such a case. So take a situation where RFD 06 is issued, let's say in this June month, and department has, let's say in July month, July, August, September. So department has gone on appeal in first week of October. Okay. And the APL4 by the first appellate authority is passed in January 2024. Okay. Now they cannot issue, and this demand pertains, let's say this refund pertains to 2017-18. Now there is no notice for demand of this erroneous refund. Hence, the registered person is not obliged to make this payment at all because there is no notice. APL4, the order of the appellate authority is only giving clarity about the interpretation and confirming that yes, it is an ineligible refund which is sanctioned. So what is the way out? There is a concept of protective notice and a dual notice procedure which has been laid down even under the erstwhile regime. During the excise regime, Circular 423/56 issued in the year 1998, Central Excise, it talks about this dual notice procedure. What does it mean is, parallelly when an appeal under 107(2) is made by the department should issue a protective notice, let's say under 73 or 74, whatever it is, it will issue a protective notice and keep it in call book. So it will not do the adjudication procedure, but it will only issue a notice to save the demand if at all the appellate authority allows their appeal, so that they should not lose out the time to issue a notice. Hence, unless such a notice is already issued within the time limit, the liability to pay and recover the taxes does not arise because there is a difference between APL4 and APL and DRC7. While DRC7 is deemed to be a notice for recovery, APL4 is not so, which we will discuss in the ensuing provision. And not even DRC25 can come into the rescue in such a case because Section 84 read along with Rule 161, which is amended now, where earlier the words were used in the rule was order. Now they have included even intimation or notice. That has been the replaced terminologies in Rule 161. What is the effect of this is that Section 84 and Rule 161 talk about continuity of the proceedings after the appellate order is received. It says that the proceedings will be continued at the stage it was left when appeal was filed. So in this case where refund is rejected, only RFD 06 is issued. Priorly, there is no notice. So to continue from RFD 06, there is no scope for the government to recover this demand. Hence, this protective notice and this dual notice procedure, which has been envisaged in 423, Circular 423, will hold good even under the GST law principally. So the DRC 25 also doesn't have scope for issuance of a fresh notice. So this is something we may have to look into. Let's take the next situation where 10 lakhs is the, before going to the facts of the case, let's try and understand and distinguish between APL4 and DRC7 conceptually or, from the operational perspective. What is APL4? APL4 is the summary of the order passed by either the first appellate authority or the revisionary authority under 108 post issuance of RVN1, or by the appellate tribunal, or by the court of law. What does it state? APL 4 indicate the final amount of demand confirmed by the such authority. It is only indication of the final amount of demand. Like we have Rule 142 sub Rule 6, which deems DRC 7 as a notice for recovery, there is no deeming provision where APL 4 is also treated as notice for recovery. Because of the absence of such a provision, issuance of notice becomes very important. And that is how DRC 7 has that distinguishing feature. If you see DRC 7, the words highlighted in red are there in form DRC 7. You are hereby directed to make the payment by such and such date, failing which proceedings shall be initiated against you to recover the outstanding dues. Thus, it is also a notice of recovery apart from being summary of the order. But that is missing in APL 4. Hence, it works on a different footing. Let's come to the facts of the case. Order in original with the summary uploaded in DRC 7, let's say 10 lakhs IGST tax is demanded. I'm not talking about interest and penalty because it's a case which we are trying to understand for our thoughts on this. Because I've gone on appeal, I'm required to make 10% pre-deposit at the first appellate stage. So I've made a deposit of 1 lakh rupees. Now let's say APL 4, that is the first appellate authority order, confirms the original order demand. So 10 lakhs entirely is confirmed. Now what is the course of action required from the department or from the registered person perspective? Is it sufficient to pay only 9 lakhs, which is the differential between 10 lakhs and 1 lakh? Or is he required to pay the entire 10 lakhs and make a plain paper application because RFD 1 does not cover this scenario? Section 54 read with rules 89 to 96 does not cover this situation. Hence, is it required to make a plain paper letter for refund of this pre-deposit? It appears so that since there is no mechanism for this appropriation of pre-deposit to the liability confirmed in the appellate authority order, it becomes pertinent that entire liability is discharged and refund is claimed on a plain paper letter. So one another aspect which we discussed initially that we will dwell upon is that what are the status of all the DRC 03s filed where DRC 4 has not been issued? Is it important to inform? How significant is it to inform the proper officer about making of this payment? Don't worry about all this. It is not greatly significant to inform this. Once we have made a DRC 3 with the proper remarks and stuff, I mean, that indicates the voluntary payment. In fact, 73.5 provides various situations when DRC 3 could be made. It could be on self-assessment, whatever I have assessed, or on intimation by a proper officer about the tax to be paid, which is by and large DRC 1A. So both these situations, DRC 3 could be made. But even in these both situations, if he has to, there should be an acceptance of there should be an acknowledgement which should be issued in DRC 4 accepting this payment. But what if this was erroneously done? Can I file a refund claim, or is it the finality what have been paid and the government is it like it has been recovered by the government forever? Definitely, if I have the time limit prescribed under 54 and it is an erroneous payment, definitely I have an opportunity to file a refund claim, explain to the best, that such an error has occurred, and then go ahead with the refund claim. Of course, the challenge would be, initially I asserted something that I voluntarily paid. Now I am introducing a new assertion stating that what I did initially was wrong. So there is a double burden on me to prove that new assertion is correct and final. So subject to that, yes, I do have an opportunity for claiming the refund. So this also could be considered, and what is hence the moral of the story is what is paid in DRC 3, irrespective of whether it is accepted in DRC 4 or not, doesn't become final unless there is a supply or a levy which is coming, supply followed by levy coming in. There cannot be a requirement to payment except in section 76. This is an interesting case where ADT 1 is initiated on a proprietor, ADT 2 also been issued. Now a notice under section 73 is being issued on the spouse of the deceased person. Is it permitted under the law? I'm drawing your attention to section 169(1)(a), where it says that any decision, order, summons, notice, or other communication shall be served by any one of the following methods. Namely, so many other things are there. I'm just highlighting the relevant part. To any adult member of family residing with the taxable person. Now, the taxable person himself is not existent. How can the service happen to adult member? Because this clause they do not fit into. So probably it might be a good point to counter and question the very service of this notice by quoting section 160 subsection 2 about the validity of the service of this notice, rather than getting into the merits of the case. So same would be the scenario even when order is served. The only situation which get altered is order is also issued and initiation of recovery proceedings is pending. So I've tabulated these three situations. In the first situation where DRC 1 itself is not issued, or even in the second situation where DRC 7 is not issued, it cannot be served on the spouse. But in the third situation where 7 is being issued, only recovery is pending, they've not even gone on appeal, then it can be recovered from the spouse. In two situations again, if business is continued, then the entire such tax or demand due can be recovered. But if the business is not being continued by the spouse and it is shut down, and only to the extent of the inherited estate of the deceased person, owing to section 93, the recovery from the spouse is possible. Let's get into this interesting case of interception by the proper officer, and issuance of MOB 9, which I said that 129(1)(b), owner did not come forward and penalty equivalent to value of goods has been demanded. Now, to understand detention, seizure, confiscation, disposal, and then recovery. So in this interception process, first the conveyance is intercepted and detained. So they hold back the conveyance for some time. Then if they see that documents are improper and those situations, then they proceed with the MOV 6, which is an order of detention or seizure. In fact, there is a difference between detention and seizure from the legal connotation per se. But however, under section 129, they are using it interchangeably. Then after seizure, confiscation should happen. What is confiscation? That is the process where title gets transferred to the government. Only after title transfer happens, disposal can be done, where they call for the auction, notice is issued for auction, then notice of the successful bidder, and then they issue a sale certificate. All these proceedings is there. And after that, the recovery of the taxes due and amounts due and balance, if any, has to be returned back to the person. However, it's interesting to note that 129 subsection 6 has been amended and a new rule 144A has been inserted with effect from 1st January 22, where in case of MOV 9 being issued, and within 15 days of service of this MOV 9, the person does not come forward to make the payment, then without going to confiscation, because confiscation proceedings is under 130, without issuance of MOV 10 and 11 and taking up the confiscation proceeding, directly disposal can be done owing to this new rule 144A insertion and the amendment herein. So this is a scenario where the law is permitting to sell the goods or dispose of the consignment without even first getting the title transfer to the government. So disposal without confiscation is being permitted under this new provision. So this is a different sort of a recovery mechanism which has been prescribed under the GST law. I've also contrasted it with the old section where it said that further proceedings under 130 to be initiated before disposing the goods, but probably that was taking a longer time, and for many other reasons government thought it proper and appropriate to permit disposal even without title transfer. And the last scenario I would be covering for the day is taxes collected but not paid to the government. Section 76 is a very, very powerful section which is available with the government. And that also brings in the importance of classification under the GST law. Many a times we see clients casually ask, see, this is the product I'm dealing. Can you please share HSN? Please share within half an hour. I have to issue an invoice. So casually they ask it, but classification is a altogether different funda, because we need to understand the product service thoroughly. We have for goods, we have the, customs rules of interpretation to arrive at the HSN code. For services, we have the scheme of classification as to, we should thoroughly understand what exactly, because clients generally give it a commercial nomenclature. They might call it with a fancy name, but that might not be the actual product. So thorough understanding of the product and service is required before we suggest them with the appropriate HSN code. So HSN code is the first step in the classification process, followed by the rate applicable in the corresponding notification. Why is it important to do a proper HSN classification and the arriving at the rate of tax? Can't I blindly adopt what my supplier has given? The answer is the self-assessment is, though powerful, it brings in with us a bag of responsibilities. If my supplier has erred, I can't inherit that error and carry forward it. I have to face the music for my mistakes. I can't count upon him. So it is an independent evaluation by every supplier. We have seen instances where same product, I have 3 different suppliers, 3 different people are using different HSN and rates of tax. What do I adopt? For whatever items I bought from that fellow, I will adopt the rate and HSN what he has given. For this fellow, can that be possible? If he has done that error, he will face the music for it. I have to evaluate it afresh and then move ahead. Why is it important? Because Section 76 has empowered the government to collect any amount which is represented as tax also to be recovered from him, irrespective of whether he has collected, whether it was taxable or not, all that. Because levy is a statutory obligation. Payment of taxes is a statutory obligation. Collecting the taxes from my customer is a commercial negotiation. So I can't commercially, if I failed in my commercial negotiation, my statutory obligation I am not absolved from. So it's important to do a proper classification and then pay the taxes, because wrong classification can be a nightmare. I've tabulated few examples over here. 4 situations I've taken. Exempted treated as taxable. Example, medicine sold at MRP to inpatients. The Legal Metrology Act says that every such goods falling under its purview, MRP has to be stated. What is MRP? It is an inclusive, all-inclusive price, which includes taxes as well. Now, from its inpatients, it being healthcare services, it is a composite supply and it is claiming exemption and issuing a bill of supply. But when it comes to the value, it is collecting MRP, which is including taxes. Now it becomes amounts collected representing it as tax. Hence, it has to be paid under Section 76. And ITC is also lost because thinking that it is exempt, hospital is not taking that credit. Only pharmacy related sales, it is taking credit. So that is the risk of Section 76 notice, where it is recoverable even though it is not collected or even ITC is not claimed. All that is my headache. And whenever it is a demand under Section 76, mostly it requires a cash payment only. Why? Because it is not an output tax. Now, is there levy on these medicines? No. Because of this inpatient services getting covered under composite supply, although I've collected representing it as tax, it is not tax. So 49(4), which talks about payment of taxes, which can be ITC can be appropriated only against my output tax. Now, what I collected in the name of MRP is not taxes, but amount representing as tax. Hence, I don't get the benefit of ITC also. So I have to discharge this only in cash. And I'm not eligible for ITC because it's an exempt supply. Let's take similar situation for composition registered person who sells MRP products. He's not entitled to collect taxes, but still he collected. So he discharged 1%, that is not sufficient. Again, he has to pay these. Let's take an alternative situation of taxable treated as exempt. Now, CA coaching by an educational institution, integrated courses and all, they provide BCom along with integrated CA coaching. See, they are treating everything as services provided to students, but it is not education service because it is not a degree recognized by an university. It's a separate thing, and hence that there doesn't fit into the definition of education services. Hence, if they artificially fuse two things, there is a risk of mixed supply and highest rate will apply. Even the BCom fees, what they collect also might get covered under 18%. Even though they did not collect this 18%, still they are liable to pay because Section 76 is clear about that. Let's say there is a rate change, 18% reduced to 12%, but this fellow continued to 18% till some 3 months. Now, what is collected as 18%, even that differential 6% he has to pay, and that he has to pay in cash only. Why? Because that is something, an amount which is represented in tax and not output tax. Hence, he is required to pay in cash only, but he is eligible because product is per se taxable. So there is no bar under Section 17 for the claim and the utilization of it. So ITC is eligible. I've just put up this table to bring to your kind consideration that classification is such an important thing, and errors in classification can lead to notice under Section 76 and by recovery thereof, irrespective of whether it is collected or not. Even though wrong tax is discharged, wrong amount is discharged as taxes, right tax becomes due because there is no cross cancellation of wrong tax versus the right tax provided under the law. Only place it is provided is 77, where IGST treated as CGST, SGST and vice versa, where interest is only waived but not the original amount which needs to be discharged the right way, and then refund has to be claimed of the wrong taxes paid. So as I come to the last part of my presentation, and of course, we can take up the questions after this. What are the key takeaways from the entire deliberation we had for the past some time? Yes, self-assessment is very, very powerful. We have to be extremely careful while replying to the notices. With one important thing to remember, that we should not give extra information to complicate the case and turn it against to our own selves. less is more. That could be the mantra under the GST law, because once we introduce additional information which was otherwise not required, then when the department contests this self-assessment, originally the burden of proof is on the revenue to support the allegation of allegation of non-accepting the self-assessment. The moment we introduce the additional material, section 101 of the Indian Evidence Act states that the person who introduced the material is given the burden to discharge that extra assertion he makes. Thus, the onus shifts to the registered person. One must be careful while responding to notices not to give extra information which otherwise was not required, and only when there is a after keen evaluation, it is ideal to provide. So less is more is the mantra. And whenever there is doubt, better dispute the demand so as to avoid the direct recovery proceedings. Now, revisiting the legal provisions contextually will pave way for contesting the demand. Many a times you would have read the provisions and thought and got an understanding about the provision. But whenever a new case comes up, if we give it a fresh perspective and from a contextual reading, if we give, new thought processes will emerge and new points will come for the countering of the replies. So it is a good idea to do it. And in case of involuntary payments or erroneous voluntary payments, please file refund within the section 54 timelines, so that just because it is paid or voluntarily, or even if it is accepted by DRC 04, doesn't mean that we have lost the right on it forever. Unless there is a supply and a levy and there is a demand, there is actually a requirement to pay taxes, there is no need to pay taxes owing to any pressure or anxiety and stuff. So these are the remedies which are available in the law. So these I thought, instead of going with the conventional way of, addressing through the section rules and things, I thought I'll take up few scenarios and then connect the legal provisions for a better understanding, so that we get probably some thoughts to consider when such notices and such intimations come to us in lieu of the recovery of the demand. Thank you very much. I'm happy to take up any questions.
Thank you, Annapurna ma'am, for your lovely session. The session was a lot of technical know-how that we required in the subject, and it actually shows so many important points that we generally miss out if we give it a normal reading. But you have very well explained it with all your case laws, all of them being so different and making almost all the possibilities that can be covered under the situations, with the relevant reference to the relevant provisions, rules, and the sections. Thank you, ma'am. And there is one question. Yes, ma'am, you were saying something?
No, I was just looking at the chat.
Okay, so there's this one question which has come up from Neeta. It says, if party files GST return after expired period, and due to this, GST department has reversed our input tax credit and created demand against that purchase bill along with interest and penalty, can this input be eligible for the claim after deposit of the same? This relates to financial year 18-19.
The payment of taxes, the condition under section 16, which says that taxes has to be paid to the government, doesn't mean that it should have been already paid at the time of making a claim. Take this situation. Now, you are filing, let's say you are the supplier and I am the recipient. You are also filing your return on 20th. I am also filing my return on 20th. Let's say I filed on 18th, you filed on 20th. When I filed my return and claim the credit, although it is appearing in 2A, you have made only payment on 20th. So can we, ideally, these things cannot be considered as a ground for demanding that, demanding that liability, which is non-existent in fact. So definitely it is possible to counter stating that condition is fulfilled. So there it becomes very important to obtain this tax paid confirmation letters, irrespective of the appearance of the same in 3B or 2A or not? Because ultimately, how do I know what taxes he has paid? So obtaining tax paid confirmation letters should suffice, and definitely we can contest based on this.
So this is something similar to what we were discussing in the beginning, that certain notices are nowadays being, issued by the department, where in what is happening, they are directly blocking the input tax credit and they are raising the demand on that without any notice being issued to the assessee. Is that a possibility? How good is that demand, recovery already done by them?
See, you're talking about Rule 86B, I guess, no? Just a minute.
Yeah.
86B or 86A? We have one.
86A, I suppose.
86A, no? Yeah. 1 second. See, in Rule 86A, there are some conditions, Yeah. So, for use of amount, sorry, 1 second. Yeah. So, 86A, so conditions for use of the amount available in the ITC. Only in those situations which does not get covered therein, then that Rule 86A can be invoked. So, if at all we are, we definitely have a scope for contesting on that. We had a situation where it was a 16-4 case. That is my I have filed my 3B after the timeline in September. So it's a 16-4 case and ITC has been claimed. In such a case, they've used this Rule 86A and blocked the credit. So, see, that is not permitted over there because that doesn't fit into the criteria what is prescribed in 86A. What we have done is we've made an application to the commissioner and, stated that this restriction is not applicable in our case. So, kindly give directions for removal of this restriction. So if it is not accepted at that stage also, then that we will treat it as a decision and then go on appeal. See, ultimately, Rule 86A will require unblocking within 1 year. They can't keep it forever. There is an automatic unblocking which is required only as a temporary case where those things fit in over there. So probably writing a letter to the higher authority, could be additional commissioner or commissioner, and then basis that we have treated that as a decision or an order, and appeal has been filed under 107. Later on, it is still pending now. We are going for second appeal in that case.
Okay, ma'am.
So
this is something, yeah. So nowadays these are being issued, and relevant to this.
One more aspect is there comes a question now. The decision is of the additional commissioner. Now, generally, the appeal is before a joint commissioner. How can a decision of higher authority be taken up before a lower authority? So, we have put in a point stating, giving reference of section 5.2. Although the decision is done by additional commissioner, he has exercised the powers of a subordinate authority owing to section 5.2 and done it. See, the proper officer is required to do, but since he did not oblige to request, we had to go to the higher authority. Now he stepped into the shoes of the proper officer. Owing to 5.2, he has done it. That is why that also we have put in our appeal document stating that the appeal is maintainable owing to the provision of section 5.2, where superior authority can utilize the, what do you call?
Uses power for
the power of the subordinate authority. Can exercise. The better word is exercise the power of the
exercise the power. So this was one of the questions that came up on the chat box. If there is any more other question from the participants, they can put it on the chat box. If not, then I want to ask one question here. Something related to notices and demand as well. So there are these notices which are being issued by the department under section 151. So how do we take up that? Because if we give the reading to such notices, no order is mentioned there. What is being mentioned is that on scrutiny of the records, it has been found out that so and so is the difference, and you are required to appear before the proper officer, whoever has issued that you have to appear and give the explanation regarding this, or else recovery proceedings will be initiated against you.
Which section is it issued? Notice is issued under which section?
151.
151.
151.
151 is
Yeah.
for asking the information, isn't it?
Yes, it is. But there is a restriction, ma'am. If we read notification section 151, it says
Power to
it should
call
be
for-
against an order.
No. See, power to call for information, which says commissioner or an officer authorized by him may by an order direct any person to furnish information relating to any matter within such time, such manner, such form as may be specified there. Where is the form specified? No rules, no forms. Hence, this section
Yes.
151 is not yet functional. So,
Yes.
so there should be an order given by, so we need not oblige to this. They can't go, I mean, why will they go under 7512? It is not a case covered under 7512 for direct recovery because it is not a self-assessed tax. They're only calling for
Yes.
information using 151. We can state that we can object quoting 160 subsection 2 stating that the validity of service of this notice is not entertained. Hence, I'm not required to provide any information on this. The person who is being served is not obliged to reply to this because it is not yet functional. There is no form, rule prescribed. Even if a commissioner has issued an order, they should specify the form and manner, which is not there.
Yes. So now what is
deny,
happening?
We can definitely do a active disobedience and deny to reply on merits and simply object under 160 subsection 2.
Okay, ma'am. So basically what is happening, these kind of notices, it is putting the assessee under a lot of pressure. And, there is a lot of havoc among the business communities that, okay, I've got the notice, so soon my property is going to be attached because it is mentioned in the notice itself. So this is creating a lot of,
are they
issues among these.
Are they registered persons or unregistered persons?
There.
Registered persons. So they're calling for information under 151 for the registered assessees. Very strange. Very strange,
so
actually.
These
Definitely
recently regarding the validity of such notices.
Correct.
Okay.
Nothing to
Ma'am.
panic. We should educate them, and there's nothing to panic. So
yeah. So that is what we do. That is what we are here for. So
correct. That's our role.
This is something from a professional point of view that we should give an advisory accordingly to the assessee.
See, otherwise giving more information will land them in trouble.
Yes.
Which otherwise they're not required to. See, that doesn't even tantamount to suppression because only if the officer had authority to ask for it, then only it becomes suppression. When there is no authority to ask and then we deny not providing it, doesn't amount to suppression.
Totally, ma'am. Agree with you. And totally it goes with one of your key takeaways that you mentioned, that less is more. So
very true. Yeah.
Very true. So that is one of the issues. And one more query that is coming to my mind right now is if say the what is happening in practice right now, in order to recover the demand, they are threatening that if you are not paying the demand amount, then we are not going to leave the seized goods, or if we are not going to get the amount recovered from you, we are going to attach the bank accounts, even if of the person who is not a part of the organization. So these are the threatenings that they are giving. How far is it sustainable?
See, DRC 13 can be issued only if there is a DRC 7 and 3 months time limit is over and you're not responding to it. So if you're preferring an appeal, you don't want to contest, you don't want to pay that, then you have to prefer an appeal within the 3 months time frame so that After preferring an appeal, you will write a letter to them that matter is sub judice. It is pending. Hence, recovery proceedings cannot be initiated because Section 107 6, if I'm not wrong, it says that once there is a pre-deposit is made and the appeal is filed, the balance amount is deemed to be stayed. So because of this deeming fiction of balance amount being stayed in the provisions itself, they cannot initiate the recovery proceedings. So definitely we can write back to them once an appeal is preferred. But if not preferred an appeal, then 78 comes to the rescue and they are entitled to recover it.
So my next question to you regarding this is, how far do you think that if the C start is in place, as suggested recently in 50th GST Council, it will make a lot of difference to such recovery proceedings?
See, definitely many people are waiting. In fact, there are so many cases where for everything you can't go to High Court. And first appellate stage is crossed, and we have that circular where it says that till the appellate tribunals are formed, the demand has to be kept in abeyance, and we are writing letters to keep it to keep the precipitative action under hold, owing to the circular and all that stuff. Yes, once the GST appellate tribunals, take the form and starts becoming functional, I'm sure it might take apne number aane mein to it might take couple of years because there is whole lot of cases piled up. But yes, it would be a less expensive measure for the taxpayers to go to the second appellate tribunal. I mean, second appeal stage of appellate tribunal, because every case you can't go to the High Court where it is an expensive route as well. So definitely, many people are, all litigants are waiting for this tribunals to get formed and become functional.
Yes, ma'am. So what is the thing going on now is, since there is no appellate and not, as mentioned, not all the assessees want to go to High Court for this, and they don't want to be harassed as well. So there is very limited scope for them to, if they don't want to move to the High Court and appeal for the
Correct. So
demand
they have to
recovery.
wait for the tribunal to be formed. Hence, meanwhile, if you have an first appellate order which has come in and you have decided to go for a second appeal, please write a letter to them. Wherever possible, make the 20% differential pre-deposit also, so that it indicates that you're serious about filing the second appeal. And then file this letter so that they don't, once again initiate the recovery thinking that you're not going for the second appeal.
Okay, ma'am.
Yeah.
Thank you for
Correspondences
giving.
will help. Yeah.
Yeah, thank you. So I think there are no more questions.
Probably if
on
anybody
this.
wants to unmute themselves and ask, might be instead of, is that permissible? They can unmute.
Putting it in the chat box. Yeah. They can put their hands up. I can probably unmute them.
Okay.
Yeah, Annapurna.
Yeah.
Hi.
Hi.
Hi, Aruna.
Thanks for coming. So
Thank you.
I just had one question, which is when you're saying that the notice cannot be issued to the wife of the deceased proprietor. So in that case, what happens when we go to 93(1)(b)? Say 93 says that the demand can be raised from the legal heirs. So is there a dichotomy in the law in that angle that the notice cannot be served?
93 comes after culmination of demand. See now,
Right.
the order has to be passed. Then only 93. See, the DRC 7 is the trigger point for recovery.
Yeah.
So if DRC 7 has been issued, then only recovery can happen owing to 93.
Right.
But in a situation where notice and order itself is not served on the person and he is deceased, 169(1) cannot offer support to serve to the relative. It says adult member residing with taxable person. Now, taxable
Right.
person himself is not there.
No.
So,
Yeah, right.
and we cannot fit into there. So, see, it's a total technical ground. It is in a practical case. We have tried this out. It's a total technical ground. So we'll have to see. These are just possible aggressive thought processes which we can think of, rather than going on merits, doing donkey's task for it's so much of hard work otherwise, chances of success is also
Yeah. No, I agree. I completely agree with you that this 161A gives a new perspective to the entire thing. That gives the entire perspective. And another thing is about where, in case of classification, there is something which is exempt, but I've treated it to be taxable. And now I go to, say, advanced ruling or some other, there is circular, which clarifies that it's not taxable, it is exempt. That in that case, so you say that the recovery can be made of the ITC that is availed by the person, right?
See, what has happened is, let's say there is a chain of people who've done mistake. My
Yeah.
supplier, his supplier, everybody treated it as taxable when it is
Right,
actually exempt.
Right.
Now, what I collected becomes payable under 76, that too in cash. What ITC I availed, it becomes a T2 credit in terms of Rule 42. It
Right.
becomes barred under 17.2, and I need to reverse it.
Right.
Output tax they will demand in cash. So if they can't once again ask for the reversal. If they ask for the reversal, I will say that I've already reversed by appropriating it towards output tax. So there is
Yes.
one demand which will come in, which I need to pay in cash. That is the risk over there of a wrong classification. 76
Thank you.
is
Yeah.
a less attended provision, but quite a rigorous provision where, wrong classification.
Yeah, as on date, apart from Kerala, I am not seeing many notices under Section 76.
True. Yeah.
Thank you, Annapurna. Thank you so much.
Thank you.
I think if there is any more question, we can take a couple of more questions. So I don't think so anyone is there for any further more questions. Okay, since no more questions are there, we can thank Annapurna ma'am for this wonderful session and highlighting the intricacies of the demand and recovery proceedings, giving us such an overview with so many case laws, and her key takeaways were a cherry on the cake to make us understand how to handle it professionally and also from the perspective of the assessee. So thank you so much, ma'am. I also would like to share the e-memento with you, which we are giving you on behalf of ACAE. So please accept the same, and you can use it for as part of your, so many other awards that you have already received.
Thank you
Just
so
a
much.
moment.
That's really nice.
Just a moment, ma'am. I'll just share. I hope it is coming on the screen. Is the e-memento coming on the screen? Ma'am, please accept this e-memento on behalf of ACAE.
Thank you so much. Yeah.
We'll be forwarding it to you also so that you can use it and make it a part of your gallery too.
Sure. Thank you.
Thank you. Thank you to the delegates also for being a part of this wonderful session. And we hope that it has actually added to a lot of value addition has been made to your thought process. And you may start thinking like ma'am is doing. And thank you for the session. Thank you, ma'am, once again for being a part of this certificate course. And I thank you on behalf of ACA. Thank you, ma'am.
Thank you.
Thank you.